Let's start with the immediate impact on consumers. Because fixed-rate mortgages at 5 major banks just hit 7.010%.
Oh, wow.
Yeah, I mean, that is the highest level we have seen since October 2022.
And the mechanism driving this is, the prolonged Iran war. When geopolitical tension creates inflation concerns, investors demand higher returns to compensate for their money losing value over time.
Right, which directly pushes up the 5-year bank bond yields, which, dictate those mortgage rates from 3.499% to 4.119%.
And it gets worse because starting April 1st, a housing finance guarantee fund fee revamp means borrowers taking out over $500 million face up to a 0.25 percentage point rate increase.
Yeah, and, well, a law did actually pass to ban these costs from being passed to consumers, but there is this weird 3-month regulatory gap until July.
Okay, let's unpack this. Is this gap essentially like being forced to pay a toll for a bridge that hasn't officially opened yet?
It's actually a bit more complicated than that. It is more like paying the toll, but the money is going to the previous bridge builder who already packed up and left.
Jeez.
Right. The law protecting consumers exists, but this specific 3-month delay leaves current buyers holding the financial weight until July.
That is incredibly tough. But, these domestic economic pressures like inflation and rising bank rates, they are not isolated to Korea. They are the exact same metrics causing significant unrest globally right now.
Yeah, looking at the recent No Kings protests, which involved 8 million people across all 50 U.S. states and globally, what stands out from a data perspective are the underlying economics.
Right. And just as a quick neutrality check for folks listening, we do not endorse any political viewpoints here. We are just looking at the facts. And the primary grievances cited by these demonstrators are rising gas prices directly tied to the Iran war.
What is fascinating here is how intertwined foreign policy and domestic wallets have become. These global demonstrations reflect the exact same inflation metrics that are tightening Korean financial markets today.
So with all this economic uncertainty, where is Korean corporate capital actually flowing? Because the Seoul Economic Daily indicates a highly concentrated shift toward AI and physical infrastructure.
Yeah, in the first quarter, completed mergers and acquisitions matched last year's pace, with 114 deals totaling 18.77 trillion won. But the critical indicator is the in-progress deals.
Right, those jumps like 113.73% year over year to 10.13 trillion won.
Exactly. That jump in in-progress deals signals a very distinct, rapid pivot. Capital is concentrating on what the market calls irreplaceable sectors.
Like the 5 trillion won joint venture in renewable energy between SK and KKR. But here's where it gets really interesting. Are companies making defensive maneuvers against global instability or offensive plays to secure the AI infrastructure?
It's an offensive play, for sure. It illustrates the K-curve phenomenon. In a K-shaped trend, certain sectors climb sharply while others decline. The upper arm of the K here represents the undeniable infrastructure needed for AI.
Right. Companies are acquiring these physical assets to ensure they aren't left behind as AI scales. But there is a huge bottleneck they are running headfirst into, which is electricity.
Yeah, the Korean government and industry are currently clashing over how to generate that required power, because data centers require vast amounts of electricity.
However, the government is actually reducing mandatory supply allocations for fuel cell power generation, specifically what is known as gray hydrogen.
Just to clarify for listeners, it is called gray hydrogen because it is produced using liquefied natural gas, meaning it still emits carbon dioxide during production.
Right, so it has a very low alignment with the government's strict carbon neutrality goals.
Exactly. But industry experts fear losing a 20-year domestic value chain over this sudden shift. For context, even China, the world's top hydrogen producer, still relies on 98% non-green hydrogen to meet its energy needs.
If we connect this to the bigger picture, it really highlights the friction. How does Korea balance strict carbon reduction goals with the immediate heavy energy demands of new AI data centers?
Right, it is a profound structural challenge.
Which leaves us with a provocative thought for you to consider. With capital rushing to AI, but traditional energy facing strict regulatory hurdles, will the data centers of tomorrow actually have the power they need to operate?
That's all for today's deep dive.
We'll be back with more insights.
You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.